Hi there, welcome to Kneppyinvests. Sometimes, when a company releases their half year or 4 year results, many investors, particularly new investors, can be quite confounded by the market reaction to those results. For instance, if you saw the profit of a company down 20% from the previous corresponding period, or even revenue down 20%, you might think there would be a bloodbath in terms of the share price of that said company. But sometimes that does not happen. Sometimes the complete opposite thing happens and the share price rallies. And this exact thing happened to Nick Scali on the 6th of February 2024. The company reported their revenue and profit down between 20 and 30%, yet the share price rallied about 16 or 17% on the day. And then the following day, share price rallied another 5%. So in this video, I'm going to discuss why there seems to be a dislocation between the company's financial results and the market reaction. To understand why the market reacted the way it did in regards to Nick Scala results, we have to go back to the company's general or annual general meeting that was held on the 19th of October 2023. And this is found right at the end of the transcript from the address by the chair of Nick Scali, Mr. John Ingram. And I think it was about 3 pages long. So the third last paragraph of this particular address. Now, in my opinion, and this is just my opinion, this is the most important part of the annual general meeting when a company announces how the management announces how the company is performing through the start of the financial year and if the company gives any guidance. And that's exactly what happened in this particular paragraph. So let's have a look at this guidance that Nick Scali released on the 19th of October 2023. Based on current delivery levels, we expect net profit after tax for the first half of financial year 24 to be in the range of 40 to 42 million. So keep that range of profit in mind. This is very important when we look at the company's half-year results that they released on the 6th of February 2024. And here we have the results the company released. On the first half, or the top bit of this particular slide, is taken straight from their half-year financial statements. So all they're providing, and this will be found on the first page or second page, the revenue and the profit. And you can see straight away, revenue down at 20%, profit down 29%. So in isolation, and if you knew nothing about this company, knew nothing about the guidance the company released in October, you would think the share price would be absolutely hammered, down maybe 20, 30% or something like that. But let's go back to the profit because this is very important. So even though it is down at 29%, look at the number, 43 million. So remember the guidance the company gave. They expected profit to be between 40 and $42 million for the half year. So in effect, this was a profit upgrade. And we all know that profit upgrades are the most powerful type of announcement a company releases because it tells us, the investors, that the company is actually doing better than they forecast. And this also means that all the analysis who are following and putting their numbers into a special machine to spit out the true valuation of this company have to change the numbers they are putting into their models. And means also the fair valuation they are going to be spat out with will have a higher number attached to it. That's why the share price rallied, because in effect, the company had a profit upgrade in the half-year results. Nothing or few things you have to take into account when a company releases their financial results, and you might be a bit bemused by the market reaction, is any sort of reasoning why the profit or revenue decreased from the previous corresponding period, or if there's any trading update the company releases. And this could have a profound effect on the market reaction. So the company actually did provide us with some information on why the revenue was down from the previous corresponding period. And the company also gave us some indication on how the company is performing during the start of 2024. So let's get to the first point here. Why was revenue down? So revenue in the period was consistent with written sales order levels and typical delivery lead times. But this is the most important bit I'm going to get into right now. Revenue in the prior period benefited from increased deliveries as the elevated June 2022 order bank reduced with lead times returning to pre-COVID levels. So in a way, the previous corresponding period revenue and profit was elevated above normal levels or above what you would expect from this company. So naturally, we all expected, the market expected, the company expected revenue and profit to drop in this particular half year. But more importantly is a recent trading update the company gave within this announcement, and this is positive. January 2024 written sales orders of 58.9 million were 3.6% over January 2023, with like-for-like up 2.6%, continuing the positive momentum of the second quarter from the first half of financial year 24. So this means everything is moving in the right direction from Scali. So if you combine all these different factors, even though the revenue and the profit of this company dropped between 20 and 30%, the market reacted completely in a different way and the share price rallied about 20%. And here is the updated chart to the end of trading on February the 7th, 2024. And you could define this as a breakout with Scali's share price. So the things I'm looking for, at least a 6-month high in the share price, we definitely have that. In fact, this would be at least a 1-year high in Scali's share price. Not only that, the company released positive financial news. Now, a profit upgrade is positive financial news. So just don't look at the fact that profit and revenue were down from the previous corresponding period. These numbers beat companies' management forecast or guidance. The other thing I look for is increased volume, which means the market is excited about these results that were released from Scali. So this is definitely a breakout. And that is all I have for this look at why Scali's share price rallied pretty hard on what looked like quite disappointing financial results. Revenue down 20%, profit down 29%. Why did the share price increase about 20% over the next 2 days? Because this was a profit upgrade. The company actually performed better than what management expected back in October of 2023. They also gave a positive trading update. So all that combined led to the share price rally in Scali and a breakout to the share price. So things are looking good for Scali. And I am a little bit biased because I'm a shareholder of this company, but these were good results because, again, this was a profit upgrade. If you have any thoughts, any questions, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.